Dear viewers, welcome to our channel GVS Bank Academy. Now I am going to discuss about JAIIB, Accounting and Financial Management for Bankers, recalled questions from exam dated, that is recent examination, 14th May 2023. This is part 1 to 15 questions we are discussing now. Now for the October JAIIB examinations and November-December CAIIB examinations, interested members are requested to contact on this number. And I am a financial professional having with the following qualifications on the screen. These are 10 questions they are asked. The accounting standards, regarding accounting standards on 14th/5/2023, nearly 10 questions. So that's why I am discussing under accounting standard. Accounting standard 1, disclosure of accounting policies in the financial statements. Accounting standard 1, disclosure of accounting policies in the financial statement by the company, that is 1. Accounting standard 4, contingencies and events occurring after balance sheet date. Balance sheet date 31st March. From that date up to finalization of the balance sheet, any contingency events are occurring that has to be noted in the financial statements. That is called accounting standard 4, contingencies and events occurring after balance sheet date, that is 31st March to finalization of the balance sheet. Accounting standard 5, net profit or loss for the period, prior period items and changes in accounting policy. Prior period means, for example, 1st March 2022 to 31st March 23 is the financial year. Any items prior period, prior to 1st April 2022, any items are there that has to be noted separately under accounting standard 5, net profit or loss for the period. Accounting standard 10, property, plant, equipment, fixed assets. Property, plant, equipment, fixed assets, and also depreciation accounting, also accounting standard 10, property, plant, equipment, fixed assets. AS 18, accounting standard 18, related party transaction disclosures. What they have to disclose in the financial statement? Name of the related party, relation with the company, what is the volume of transaction, amount outstanding as on balance sheet finalization. These minimum disclosures to related party. And consolidated financial statements, that is called holding company, subsidiary company, associate company, joint venture. Consolidation, single balance sheet of group companies, accounting standard 21. Accounting standard 26, intangible assets. Intangible, cannot see and cannot touch. Under the intangible assets, normally what is the disclosure is required? What is the useful life of the intangible asset? Useful life, it may be 4, maximum 10 years we can take. And these are also comes under balance sheet assets, fixed assets. Amortization rate method. Every year how much you are amortizing, return of the amount, amortization rate, percentage, and which method. And then normally, generally, intangible asset life not more than 10 years. Actual life or maximum not more than 10 years. This is accounting standard 29, provisions, contingent liabilities, contingent assets. Provisions, contingent liabilities. You see, 8 to 9 questions they are asked in this exam. It means it is very heavy weighted topic in the accountancy paper. Question number 2, section 134, subsection 5 of the Company Act. It carries a responsibility on the board of directors to comply with mandatory accounting standards. Whose responsibility complying to accounting standards? board of directors of the company. This question also they had asked. Section 129(5) of the Companies Act 2013. Again, third question different. 129(5) subsection 5 without prejudice to subsection 1 of the Companies Act 129, where the financial statements of the company. Financial statements means balance sheet, P&L, cash flow statement, and statement of changes in equity normally do not comply with accounting standards. Any financial statement do not comply with the accounting standards. The company shall disclose in its financial statements reasons for the deviation from the accounting standard, why they are deviating it, the reason for such deviation, and the financial impact in the financial statements, if any arising out of such a deviation. This is also important. Section 129(5). And fourth question, section 133 of Companies Act 2013, Indian Accounting Standard, IND-AS, as notified under section 133 of the Companies Act 2000, have been formulated keeping the Indian economic and legal environment, globalization, in view and with a view to converge in compliance with IFRS, International Financial Reporting Standards, are issued. So, in compliance, in conversation with IFRS, and our Indian government issued Indian Accounting Standards, IND-AS, as section under 133 of the companies. Total around 10 to 12 questions they are asked in this examination regarding accounting standards and its deviations, responsibility, and IFRS convergence. Question number 5, LLP, Limited Liability Partnership Act 2008. Minimum number of partners to maximum unlimited. Registration under Register of Companies, MCA. What is the tax rate applicable to LLP? Flat 30%. On the profitable income, the LLP has to pay tax 30%. This question also they are asked. Question number 6. Minimum number of members in a private limited company to maximum 200. Maximum 200. Whereas in a public limited company, minimum 7, public limited, maximum unlimited. And initial capital requirement for registration of private limited, public limited company, as per Companies Act 2013, amended 2015, no such capital requirement, initial capital requirement is required for registration of private limited company or public limited company. 8th, research and development expenditure or deferred revenue expenditure. This expenditure is going to be written off over the period of time, over the useful period of the research and development expenditure. It is going to be amortized during the benefit which the company is getting from the R&D expenditure. Question number 9, this is multiple, all paper this is important. Indian economy, accountancy, principle of banking, retail banking, CAIIB also, corporate social responsibility. This is applicable to companies with a net worth of 500 crores. Company net worth 500 crores or more. This is one point. Second point, turnover of 1000 crores or more. Another point. Or net profit of 5 crores or more during any financial year. If any financial year, net worth 500 crores or more, or turnover 1000 crores or more, or net profit 5 crores or more, the CSR is applicable. Under which section this is applicable? Section 135 of Companies Act. The company, eligible company should, it is must spend in every financial year at least 2% of average net profit during 3 immediate preceding financial. 3 previous financial years net profit into 2%, they should spend on corporate social responsibility activities as per section 135 of the Companies Act. Non-compliance to CSR is now civil wrong, not criminal, civil wrong. Civil wrong. This also there. The penalty at least 1 crore for the defaulting company and at least 2 lakhs for each defaulting officer. It is there. 1 crore for defaulting company and 2 lakhs for each defaulting officer. And this is about the CSR, important in JIB all topics, CAIIB all topics. Question number 10, East India Company. This is a chartered company. A chartered company is one that is established under special charter issued by king or emperor or head of state. Such companies are not found in India. So, these type of companies are not there. Only for examination purpose, you must remember. Chartered companies established in European countries or East India Company, Bank of India. These type of companies are not there in India. Only for examination purpose, you have to remember. Again, 11th question, marginal costing. 3 to 4 questions they are asked. What is meant by marginal costing? Refers to increase in total cost. Marginal cost refers to increase in total cost of the production due to production of an additional. If you are producing more additional items, total cost is going to be increased. This marginal costing differentiates between fixed cost or constant throughout the year, variable cost which varies, which changes, which increases according to number of units production. Number of units production is going on increasing, variable cost also going on increasing. This system links profit to volume. That's why this is also called as profit volume ratio also. Then PV ratio, profit volume, these are all questions they are asked. 2 marks question that too. Profit volume ratio. Profit volume ratio calculation formula, contribution by sales into 100. Contribution by sales into 100, profit volume ratio calculation. Contribution per unit is equal selling price per unit minus variable cost per unit. How you will get variable cost per unit? Total variable cost by number of units produced. Then you will get variable cost per unit. Break-even point, no profit, no loss. Total fixed cost divided by contribution per unit. Total fixed cost divided by contribution per unit. Margin of safety sales is equal total sales of the company or estimated sales of the company minus BEP sales. You will get margin of safety sales. Margin of safety sales means on the sales the company is getting profit. Profitable sales. Profitable sales. Question number 12. Margin under MPBF, maximum permissible bank finance, under Tandon Committee working capital assessment method. Tandon Committee is one of the old method which all banks are following for working capital calculation, assessment, determination. So, first method, the margin, parties or borrower contribution margin 25% of working capital gap. Under first method, parties margin is 25% of working capital gap. Under second method, 25% of total current assets of the company. Now, in the banks, we are using second method only. Second method. So, 25% of current assets. But in the examination, they are asking first method, second method, third method. Under third method, what is the margin of the borrower? 100% of core current assets plus 25% of remaining current assets. What is meant by core current assets? Meaning minimum level of current assets required for uninterrupted business operations, uninterrupted manufacturing operations, uninterrupted continuity of the business operations. That is minimum level. The minimum level 100% margin is required plus remaining current assets 25%. So overall, first method 25% of working capital gap margin is required. Second method 25% of total current assets. Third method 100% of core current assets plus remaining current asset 25. Very, very important for all the examinations, including promotion exam also. Then 13, fixed deposit of a bank is not a negotiable instrument. It is not transferable from one party to another party through endorsement and delivery. That's why this is called as not negotiable. What are the negotiable instruments? Promissory note, bill of exchange, check, quasi-negotiable instruments, money market instruments. These are transferable, negotiable instruments in the market. This is it. Then 14th question, general question, bullet repayment. The entire repayment of the loan may be stipulated in one installment only. One installment, party is repaying the entire loan. Balloon repayment, borrowers makes regular small amount of monthly payments that are typically lower amount. Small amounts he will pay regularly. At the end of the loan, at the termination of the loan term, the borrower must pay the remaining amount, outstanding amount, including the balloon payment. This is about this. Then question number 15, sources for issue of bonuses. How companies are issuing bonus shares freely to the existing shareholders? What is the main source? Free reserves. Free reserves created by companies. Securities premium, excess price collected from the shareholder at the time of issuing of public issue or follow-up issue. And a capital redemption reserve account. By debiting free reserves, by debiting securities premium account, by debiting capital redemption reserve account, companies are issuing bonus shares. So even though these questions are 15, it may be equivalent to 30 to 40 questions. These questions are actually asked questions in 14/5/2020. Requesting all the participants to press the like button. You will get directly any future updations are there, you will get. Thank you very much for supporting our channel regularly and continuously. Thank you very much for all.